right, good morning, everyone. We just want to thank you for taking the time out this morning to join us on this Saturday morning. And it should just take us about an hour, so you can be able to go ahead with through your day with the things that you have planned. So we just want to again thank you for being here. And this is information that we are just trying to get out to as many people as possible. So if you know someone after hearing this that you think may be interested, please do share it with them. Our goal is to help as many people as we can, help people, change their lives, and not just for them and their family, but, for they can just go ahead and start a legacy for their generations to come, help their children's children. I believe everyone has already updated their Zoom name. Thank you very much. So this session is about how to purchase 2 to 4 units with little to no money down. And presenting today, you have Michael Johnson. Michael has been a real estate broker for over 30 years. He's actually one of the broker owners of Realty Executives All Cities. He also does property management. So this information is really going to be useful if you do get into purchasing 2 to 4 units. He will be a valuable resource for you in navigating that process. We have our lending partner, Natalie Gipson. And she is very knowledgeable when it comes to all the different down payment assistance programs. There are so many out there, and you really need a professional that can help you tailor the right program for your particular needs. And Natalie is the person that we definitely gonna, steer you to. So just make sure that you have her information. Then you have myself, yours truly, also a broker over 30 years in the real estate industry. I'm also an ex-escrow officer, and that just means that I know how to work with all the players in the game so that we can make sure that we can get your transaction done and through as quickly and as smoothly as possible. So the purpose of this seminar is to provide you with information that's going to help you get more clarity on how you can purchase 2 to 4 units. And we're going to be able to answer any questions that you may have. You can put those questions in the chat. We're also going to have time at the end for a question and answer where you'll be able to come off mute to ask any questions that you might have. So our mission statement, we want to impact, improve, and enhance the quality of your life by helping you to create wealth through real estate. We want to help you ensure that you have prosperity set for future generations, and not just, you now, even if you're single, you still have to think about, those of us that are coming behind us. So let's help, let's be that village and help set our family, up for success to succeed. So what are the benefits of purchasing 2 to 4 units? Well, first of all, you get extra income. Now, as a disclaimer, I just want to say that if you're just purchasing 2 units, there's probably not going to be much extra income coming in, but that will be income that's going to help you pay the mortgage. And so, that's going to help. But extra income for you to do something with, like I said, 2 units, you're just going to pretty much cover the basics. When you get into 3 to 4 units, that's when you're going to start seeing that extra income coming in that will help you be able to do some other things. You can have a fixed cost of your principal and interest over the life of the loan. That's 30 years. That means that that payment, part of the payment, is not going to change. As opposed to if you're paying rent, most likely your rent is going up every year, but for your principal and interest, we're going to lock you in for the 30-year period. Appreciation. The property is going to appreciate. I believe everyone here is in California, and even if you don't know what property values are going for, you have an idea that they're pretty high. And so your property is going to appreciate in value, and that is definitely a benefit for you. Principal reduction. What this means is that as you make that mortgage payment, you are reducing the amount of the loan that you owe. And so the loan balance is going down and your appreciation is going up, and that's giving you more equity in the property. Okay, tax benefits. Now, our disclaimer, neither one of us are tax professionals, so we cannot give you tax advice. We do want you to, we highly encourage you to speak to your own tax professional for the benefits for your particular situation. But some things that you will be able to take the benefit of will be on the interest. Keep going. Click it, Michael. Your depreciation. Now, this is going to be, if you purchase 4 units, you can take depreciation on the 3 other units. You can't take it on the unit that you live in, and that's going to be the same thing for the repairs. It's only going to be on the ones that give you, that you're receiving the income on. Retirement income. This is going to help you when it comes to retirement. You know, when you get to that retirement age, you may just have your Social Security or your retirement plan from your job. So if you have purchased income property, you now have the income from these units that's going to help you offset and give you additional income in your retirement years. Hedge against inflation. Okay, inflation. I know when I was younger, I used to always hear there's only 2 things for sure, death taxes. Well, I'll say there's 3 things for sure, death taxes and inflation, because the price of everything is going up. You know, I'm sure that we have all experienced that in some shape, way, form, or fashion. So when you have that, and this is just on our basic necessities, you know, so when you have that extra income coming in, that's going to help you offset some of those higher costs for those items. So now we're going to talk a little bit about the buying process. Okay, what we're going to do is when we first meet with you, once you're ready, we're going to set up appointments so we can just analyze just what your needs are. So that's just going to be a consultation to where we're going to, like I said, just revisit your needs. You know, how soon you think you're going to be ready to purchase. I'm going to talk to you about getting a approval from a desktop underwriter. That's where Natalie comes in, because you do need that actual approval letter before we can begin looking at property. Once you have an approval letter, we will, you know, select properties that are in the price range that you qualify for. And then, especially with units, you know, to view the property. To view the property, you're going to view it best by driving by the area, looking at the outside of the property. You won't be able to go in and see the property at that time. So that's what we call making an offer subject to interior inspection. Don't worry, you're not going to purchase a property that you haven't seen. You will have the opportunity to see the inside. It's just that when sellers are selling units, they don't want to disturb the tenants unnecessarily. So they don't want to have a lot of people coming through, you know, just looking to see, you know, what the property looks like if they have no intention to purchase. So we'll make an offer. This would be a good, solid, bona fide offer that you'd be willing to pay for the property, you know, if all things, you know, are satisfactory for you. Now, once we make the offer, you know, there is also a period where we can have negotiation and counter offer time. This will be after we inspect the units, after you have inspections done. If there's something that doesn't pan out, we can go back to the negotiation table. We can make a counter offer. We can ask for a reduction in price. We can ask for the seller to credit you some items. Or if, you know, it doesn't work out, well, then you're not obligated to go through with the transaction. If we do, everything works out, the seller accepts it, well, then we have an accepted contract. We'll get ready to enter escrow. We'll have all your inspections done. And then congratulations, once we get through that process, we will close the transaction and you will have your income property. Michael, I'm gonna turn it over to you right here so you can talk about the importance of having a buyer's agent.
Thank you so very much, Carla, and excellent job. As of August 17th of this year, real estate really changed, and I believe it changed forever, because the way that real estate transactions were done in the past, as of the 16th or 17th of August, it is totally different. So it's our responsibility to make sure that you understand the differences of what's going on. So as your buyer's agent in helping you to get income property, number one, we're going to connect you with a lender, and we have one of the best lenders in the business coming up after my presentation. Natalie, she's going to show you how to actually purchase the property. We're going to scout for recommended suitable properties, and I'm going to let you know what that means in a moment. We're going to coordinate the showings. We're going to coordinate the inspections. But what's most important, Carla and I are going to help you negotiate the best transaction that's out there. We're going to help arrange the property inspections, provide complete transaction management, and keep you informed every step of the way. But there's so much more that we do just besides that. We're going to show you how to actually complete the purchase agreement. We're going to step you through the actual process of the appraisal and what it takes in order for you to actually get the property that you're looking for. We're going to analyze the rents for you. There's so many things that we're going to do as your buyer's agent. We can provide a lot of value to you, which is going to be totally incredible. So let me talk briefly of how real estate compensation used to work. Back prior to August the 16th, 17th, there was a seller and a listing broker, and then there was a buyer and a buyer's broker. And what happened, the compensation that was agreed upon was put into something called the MLS. The MLS is called the multiple listing service. What that is, that's where the agents and the brokers put their properties, and previously they used to put the compensation for the listing broker and the buyer broker right in MLS, and everyone knew exactly what was going on. But things have changed. The big change is that the compensation is no longer listed in the MLS. So you still have the four parties in play. You still have the seller, the listing broker. You still have the buyer broker and the buyer. But here's the big difference now. Number one, the seller, the listing broker, and the buyer broker must work out the compensation on the benefit of their clients. So what that means is that the buyer's broker, which is Carla and I, can no longer show any properties without being in a written agreement with the buyer, okay? When we're in this agreement, we will consult you. We will let you know what exactly it's going to take for you to make offers on certain properties. And here's another big deal. The buyer might be responsible for paying the buyer's broker's compensation. So what that means, on top of your down payment, on top of your closing costs, you might be responsible for compensating the buyer's broker, because the buyer's broker is going to work very hard to negotiate and to also get the property you want. Now, I want to be very clear here. The seller might still offer compensation to the buyer's broker, okay? So we're going to have to be very, very careful with the properties that we show you. If you're not in the position to compensate the buyer's broker, which is okay, there's probably still plenty of properties out there that you can purchase to where the seller will pay the total compensation. But this new law has created a lot more transparency. It has created a lot more professionalism in the business, because now the buyer's broker and the buyer can work closer together by written agreement in order to facilitate the transaction, which I think is a really good thing. So here's the new rules. Number one, Carla and I will work on the details of each listing. Before we show you any property, we will let you know, hey, if the seller's paying compensation or not. We will have a written agreement that will outline the services and the value that we provide prior to showing you any properties. Number three, compensation will not be listed on the MLS at all. So therefore, the compensation negotiation will be between the buyer's broker and the listing broker, which I believe is awesome. It's going to create a lot more professionalism in the market. It's going to create a lot more transparency in the market, and it's going to be just a better overall situation. So this new change has created relationships for the better. So I'm so excited because I am preparing to turn this over to Natalie. Natalie is our star lender. And Natalie, welcome to the call, and we're going to let you take it from here.
Hello, thank you. Hi, everyone. I'm so glad that you're here. Let's talk about the truth about credit and why that is such a huge factor. Well, credit is the world and people that have things that you want to purchase. It's their indication of how trustworthy you are in paying back whatever the item is that you're purchasing. So whether you bought goods, you bought a vehicle, you know, you're telling the company, I'm going to pay you back X dollars per month. That's why it's so important in credit. There are a lot of factors that go into making up that FICO score that you have. So it's talking about your little utilization, how much credit you actually use that you have available, on-time payment, and how long you've had the credit. If you have some hiccups with your credit along the way, we don't want you to try to repair them on your own per se. We really like you to talk to a professional that can help you. You can go to www.myfico.com. There is a fee, but you get to get a credit worthy report for buying property. Now, the little icons you get on your phone from maybe your banking institution, those are good indicators if you want to open up a line of credit at a department store or buy furniture. Those are not really good indications for buying property. We really prefer you to go to www.myfico.com. Get all three of the bureaus. It's going to run you about $30. You want to do that. Also, what you want to do maybe to protect yourself is to get some type of monitoring system so you can really know what's happening with your credit moving forward.
Also, Natalie, I'd like to say to our audience, when you run this FICO report, it does not impact your credit at all.
Mm-hmm. Now, there are some minimum FICO scores out there that range. So your FICO scores kind of go as low as 350, 400, and as high as 850, 900. The higher the score, the more trustworthy you are. So the industry and down payment assistance, if that's something you desire, the minimum down payment with a couple companies out there is $600. However, the average will be about $640, $680. So after you start the application, I'm able to do what's called a soft credit pull. It will not impact your credit either, but it gives me an indication to kind of see how you stand, what's your credit worthiness right now, and to see if it's a good time to move forward right now, or should we wait a little bit and have you work with a professional to get your score a little higher. Now, there are three major credit bureaus. There's Experian, Equifax, and TransUnion. So each of them will rate you different. They have their own rating factor, and we will take the middle score of those three bureaus, and that's the indicating score to help us move forward with your loan and your transaction. Now, if there are multiple people buying a property together, I need to give you a little disclaimer. Whoever has the lowest FICO scores is the scores we have to use for the loan. So if they're going to be on the loan, their FICO scores do matter and count if they have a lower score than if everyone doesn't have an equal score. Down payment assistance is easy, right? It's like, what is that? Well, you don't have to only be a first-time user to take advantage of down payment assistance. Let's be clear, these properties in California are a little bit higher than in some of the other states. So that down payment assistance will give you a little extra help to get in the property, right? And you do have to pay it back a little bit later. Some of the down payment assistance you pay back right away. So let's say if the minimum down payment assistance for FHA loan is 3.5%. So let's use an example of you got about $15,000 possibly to help cover that 3.5 for your down payment. That payment back per month, it'd be about less than $60 if they have you pay right away. So some companies do have you make that payment right away. Other companies will let you pay back that down payment assistance when you sell or refinance the loan. So it's called a silent second. And remember, we have FICO scores that support down payment assistance as low as 600. There are some other criteria that you need to meet, but we'll talk about that on a case-by-case basis. Now, your debt to income ratio. There are some indicators that you can't have more than 50% of your debt to income. So we have to make sure we're below the 50% debt to income ratio, okay? Now, use of down payment assistance funds. Some of it, of course, will be used for your down payment, but there are some funds you can use it to help offset that closing cost. So when you buy property, there are two big costs involved. There's your down payment, and then there's your closing cost. So the down payment can be used for both. And it goes toward the principal on that first mortgage. So your down payment helps you with the big purchase of the property. You can combine it with your own fund or gift fund. So if you have a relative, a grandma, a parent, or a favorite auntie or uncle, and they want to give you some money to help, you can combine the down payment with your own funds as well. Down payment assistance programs are state specific. So we are focusing on programs for California. If you're on the call and you're in a different state, you would contact me and I would have to connect you with a lender in a different state to see what programs are offered in multiple states. There is one program that is nationwide, and that is the Shinoa Fund. It is a national program. So there's one program that is a nationwide program. Now, down payment assistance available for first-time buyers. Yes, but you don't have to be a first-time buyer. How does that work? If your name has not been on a deed or connected to a property or title for more than 3 years, you get to reset as a first-time buyer again. So that opens up opportunities for multiple people to take advantage as a new first-time buyer again. Now, there's a company out there, it's called Golden State Finance of America. These are some of the programs they offer. So they have a platinum standard. All borrowers can qualify. You get a down payment assistance, but it's a 15-year amortization, and you can get assistance up to 5%. You do have to pay that back within a 15-year period. There's other programs called Platinum Select. These are for certain occupations like your first responders, police, fire, teachers, and medical staff, nurses, but also it will cover support and administrative staff for these professions. So they get to take advantage of some down payment assistance. Now, if you are in the Platinum Select and these specific occupations, you get a gift that you don't have to pay back. It will be like 1.5% of that down payment assistance toward that principal. You'll get the 3.5, which is the minimal down payment for an FHA loan, but they will give you a gift of 1.5% that's free and clear. How awesome is that? If you're in one of those professions or you work as a support staff to one of those professions. And then there's Platinum Assist to own. This is case by case. These are more for like your rural counties, and they have some specific programs and assistance if you're trying. They're trying to populate some of these more rural areas. So they do have some special programs. If you're gonna wanna live in one of the rural areas, contact me and we'll go over that together. Those are be a 30-year deferment. You get 3.5, 0 interest, repay it upon sale or refi, and you can get an additional 2% as a gift if you're going to move into one of the more rural areas. Next slide. Now let's look at the first mortgage guidelines. So Golden State Finance America, they have partnered with US Bank. Here are the loan limits. So this is the maximum loan amount by just the top 4 counties. We know there are a lot of counties in California. We're just focusing on the top 4. So Los Angeles and Orange County have a higher price point of what you can purchase. So you can do 1.3 for maybe a duplex, that's the max, up to 2 million maybe for 4 units. San Bernardino, a little bit lower, 824,000 for maybe a duplex, up to 1.2 for 4 units. So you have to make sure your property will stay within those guidelines. If you're outside of those counties, we can talk about it on a case-by-case basis, and I can provide the limits. Now let's talk about income limits. Credit qualifying income for USDA. So if you're going to be in a rural or purchase property, we'll talk about what your limits are for that. But for FHA or VA, there's no income limits to use this. Home buyer education and counseling. This is required for any down payment assistance program that you use. This was a major change in the industry back when the mortgage industry changed in 2008, 2009. A lot of buyers weren't informed, didn't know what was going on with their loan or different programs. So the government stepped in and said, no, anyone that's taking advantage of a program, they need to have counseling. It is mandatory. 8 hours of counseling. How do you get this? It could be in person at one of the approved counseling. I'll provide that a link for you to pick, or you can do it online in the convenience of your own home. Once you complete your counseling, the agency that's giving you the information will provide you with a certificate. That certificate will be emailed to me because it has to be added to your file before we can move forward. But it's great info because you want to be informed. Now let's talk about how all of this works. You, if you want to get down payment assistance, the location does have to be owner occupied and single family residents up to 4 units allowed, right? So you do have to live in it. Now let's talk about the properties that's not included. You can't have investment property. You cannot do a recreational vacation or second home. So it has to be primary resident that you're going to live in. Here's an example of kind of how this could look. And we really want to help show you how we can bridge that affordability gap for you. Let's say you purchase a duplex and it's $800,000 is your purchase price. FHA first mortgage will be $784,000. So that's considering if you put down the minimum FHA, a minimum deposit of 3.5%, which will be that $28,000. So you take your 28 minus the 800,000 and your loan will be 784. Now 28,000 for FHA down payment, average closing costs are 3 to 5%. So between 24 to 30,000 would be your closing costs. Borrower out-of-pocket costs would be $24 to $30,000 you would pay to get an $800,000 property. Now, what does this mean? This is huge. If you were trying to buy a duplex and you already own property, you would be required to put up a minimum of 20%. 20% of 800,000 is $160,000, but you will be able to get it for $24,000 to $30,000 if you are a first-time buyer. And we talked about what qualifies you for first-time buyer. Your name is not on a property or a deed or trust in the last 3 years. If you have inherited property,
bye, see you later.
Hello, somebody's talking to me. If you have inherited property and you don't live in that property, you can still qualify as a first-time buyer. We just have to show proof you didn't live in the property that you inherited. So that can work for you. This is awesome. 160 versus 30,000. Let's look at example 2. You have $800,000 property. Your first mortgage would be $760 estimated. Mortgage of $800,000 with the 5%. So that's $40,000 you could possibly get from Golden State Finance of America if you qualify for that. 28,000 FHA minimum down payment is 28. If you take that 28 and minus the 40, you will have money, and average closing cost is 24,000 to 30. If you took your 28,000 and subtracted from the 40,000 that you get if you qualify for that program with the 5%, you will minus 12,000 remaining for down payment assistance. You could take that 12,000, apply it to your closing cost, so it reduces the amount of money out of pocket that you have to bring to the table. Huge, huge, huge. Out of pocket cost estimated $12,000, give or take some other fees. Huge deal breaker versus 160 if it's investment. All right, giving it back to you, Carla or Michael. You're going to go over this slide of down payment and closing costs.
Yep, I got it.
Great.
Okay, so as we discussed earlier, you do need money for your down payment as well as your closing costs, and possibly also now you may need funds to cover the buyer's broker fee. Again, but don't let that dissuade you. There are ways around that. Primarily, we're still looking for the seller to help with that assistance. So the down payment basically is going to determine what your loan amount is. So we know that there's no property in California for 100,000. This is just an example. So, but if the property price is 100,000 and you put down 10,000, which is 10%, then that means your loan amount is going to be 90,000. And then the closing costs Natalie mentioned before, it's generally about 3% of what your of the purchase price of the property. Now, just keep in mind, down payment is one cost that you're going to need. Closing costs are another. Things that are included in closing costs are things like your lender fees, the lender points, your title fees, your escrow fees, your prepaid taxes, your insurance. All that is incorporated into what make up the closing costs. And again, closing costs, they are not a part of the down payment. They are in addition to the down payment. And even with the, the figures that Natalie went over before, any assistance that you can get is going to be great, which is why these down payment assistance are so valuable at this time. And they're there to take advantage of. We just have to, educate, as many people as we can, if you don't think you have the money, don't let that stop you. Let's see where you are. Let's get you in position so that you can take advantage of some of these programs. So now what's included in your payment? We have principal, interest, taxes, and insurance. That's called PITI. And then your loan to value. So basically, again, it's kind of with if you have a loan and it's 80,000 and the property was valued at 100,000, then your loan to value is 80%. And then principal, interest, taxes, insurance, that's going to make up what your payment is going to consist of. I discussed before, the principal and the interest, those are going to stay the same over the life of the loan that's amortized. That's generally 30 years is what the lenders use. Now your taxes and insurance, those, are more than likely will go up over the course, of the years. But still that's, it's not a significant number, but you will see a marginal increase on those. Also included in your payment is going to be something called MIP, which is mortgage insurance premium, or you may hear the term PMI, which is basically the same thing, private mortgage insurance. And basically what that means, that's an extra insurance that is going to ensure the lender that if something happens unforeseen and you unfortunately have to default on the loan, that the lender will be compensated. They'll be able to recover part of that loan. Okay, and then we have one thing about the mortgage insurance payment, that is only if you have a conventional loan, that's only required if you put down less than 20%. Now, since we are talking about down payment assistance programs, then more than likely you're not coming in with that 20% down, so that mortgage insurance is going to be included in your loan amount. Next slide. Okay, Michael, let's kick it over to you so you can go ahead and talk about the pros and cons of purchasing the 2 to 4 units in the single family.
Absolutely. Thank you so much. Let's talk about this briefly because we're on the runway to closing out. Let's talk about the differences between the 2 to 4 units in a single family. Let's see. Single family, let's talk about the good parts. The good parts that you don't have any tenants. You have good tax benefits. You have few city restrictions. You can entertain more freely because you don't have any tenants. You can upgrade and remodel easier. Let's talk about the cons. You don't have any help with the mortgage. No income to help you with that. You're on your own. Not as much retirement benefits. We'll talk about that a little bit later. And once again, you're on your own when paying the mortgage and the expenses. Let's talk about the 2 to 4s. All right, you do have extra income to help pay for your mortgage and expenses. You have a cheaper down payment for the first-time home buyer. I cannot emphasize this as much, and Natalie went over it. If you decide to buy a duplex after you own a home, then 20% is what you're going to be paying. So $800,000 was the example, 20%, that's $160,000.
Plus closing costs.
Plus closing costs. So if I were you, if you're looking at buying a home, if you're a first-time home buyer, I would definitely look at the benefit of buying a 2 to 4 unit before, because after you buy that home, this goes away forever. Great tax benefits. Carla went over that at the beginning. You get some really, really great tax benefits. Hedge against inflation. What does that mean? As Carla said, hey, you're always going to have that hedge because two things are going to be consistent. Your rents are going to be going up and you're going to get appreciation. So you're going to win. 1031 tax exchanges, that is a benefit. If you decide to exchange your property, and that's something we could talk about offline, you will be in the position to do that. And you have great retirement income. Here's the deal. You buy 2 to 4 units, you pay it off 15, 30 years, all that income comes to you. You can combine that income against your retirement or your Social Security retirement, and you are looking good. Faster principal reduction, which basically means when you get that extra income, if you pay your principal off faster, that means you'll be in a better shape. Here's the downside. You are in the property management business. You become a landlord. You got to understand what the landlord-tenant laws are and things like that. You have a little lack of privacy. You're going to be living with others. You got to deal with the city rent control. California is a rent control state, so therefore you're going to have to deal with that. You might inherit some bad tenants. When you first take over the property, the tenants may not be the type of tenants you want. You might have to deal with that for a moment. Vacancy factor, which basically means that if you are rehabbing a unit, getting it ready to rent up, you might have to suffer some vacancy factor. All right, let's talk about the type of properties you can buy. This is the good piece. You can buy a duplex, you can buy a triplex, you can buy a quadplex, 4 units. You can buy separate properties on a lot, which is one of my favorite. Side by side, upper and lower units, you can do all of that. Let's talk about the property listing types. What type of listing is it? I want you to be very aware of this, especially now since the changes in the real estate law. You're going to have to know what type of listing are you looking at. We have a standard sale. What a standard sale means is that it's just a normal sale, FHA 203K, no worries. Real estate owned. You may run across this. Whenever you see a property that's listed and it has REO, it means that you are no longer buying from an individual. You're buying from a bank. Would banks deal with you with first-time home buyers like 3.5% or down payment assistance? Absolutely, they will. Short sales. Short sales means that the seller has fell upon a hardship. They have to bring the lender in, which usually means that they're going to sell the property for less than what they own the property. Talk to me about that. I can explain that more. Probate. Probate means that someone died with or without a will. The technical term for that is testate or intestate. Means that you have to go to court in order to get it approved, but it is a great way for you to buy property as well. And you can also go to a trustee sale. Now we're talking about identifying the right property. What do we do? Well, what you have to do in your quiet time, you want to sit down and you want to make a list. This is when you put pen to paper and you actually make a goal of what you want. You want to talk about the areas. You want to talk about the amount of units that you're looking for. And then what's important, you want to talk about the amount of bedroom count in that unit. For example, if you have a duplex, one unit is a 3-bedroom, 2-bath, and the other unit is a 2-bedroom, 1-bath. What unit can you live in? Can you live in the 2 and 1 and get the larger rent, or do you need the 3 and 2? So you need the bathroom count. You also need the building square footage. How big of a property do you want? The lot size, do you want a big lot? In the amenities, do you want a garage? Do you want a fireplace in your unit? What do you want? You want to sit down, you actually want to put this to pen to paper so that you can actually know what you're looking for. It will be a great help to Natalie because she's going to be your financial advisor, and working together, we can make this happen. So let's talk about searching for properties for one moment. I think I'll turn this over to Carla. Carla, let's talk about searching for properties.
Okay, so what we'll search for properties, Michael does have a website you can go to. There's also the multiple listing service. When you contact me, I can set you up on the multiple listing service once we know your parameters, being your price and the area, and then I can set you up so those properties can come to you, automatically. You want to drive around some areas. If you know an area that you're interested in, drive the area. If you see any signs, don't contact the agent, don't contact the tenants, just go ahead and call Michael or I with that information, and we can be able to go ahead and get all the information for you. And then referral, your family and friends, a sign may pop up in their area. Again, get the information, contact us, and we'll take it from there.
Also, I want to piggyback on what Carla said about driving the areas. If you see a property that looks a little rough around the edges, which means look like it might be vacant, there might be some weeds growing up, contact Carla or myself with that address. We have a way to identify who the owner of that property is. We can send letters to that owner, and maybe that owner might be interested in selling. It may not be on the market yet, but it's a great way for you to identify a diamond in the rough. Carla?
Okay, so what do we need to make the offer? We discussed, before we start, we're going to need to have that signed buyer's broker agreement. Then we're going to need to have your approval letter. We need your approval letter from Natalie, and we need an approval letter, not a pre-qualification. The basic difference is approval. The information that you've provided has been verified, your income, your job, your credit, what you have in the bank. Pre-qualification just means that based on the information you provided, if this checks out, okay, we'll be able to do this for you. So, but that's not good enough to get an offer accepted. We need to have an actual approval letter. You will need to have your initial deposit. Even though getting down payment assistance, you still need to have money to go ahead and put down for a down payment. You want to make a good faith offer. This shows the seller that you are serious about purchasing the property. They will take your offer seriously. You should be prepared to come in with a decent amount. You don't want to be purchasing an $800,000 property and think you can put down $1,000 deposit and the seller's going to take your offer seriously. You want to be serious, come in, the stronger your deposit, the stronger your offer, 5, 10,000, depending on what price we're looking at. And then we're going to need that purchase agreement. Now we're going to need to have your signature on these documents. If it's not convenient for us to meet with you face-to-face to get the signatures, we do have a system called DocuSign, that's digital signing. We can send the documents to you for your signature. Keep in mind, whenever you get something from the lender or Michael or I, time is of the essence, okay? We need you to review that, go ahead, do that electronic signing and get it back to us as quickly as possible. You also play a big role in us getting this process done as quickly as possible. So we do need you to be mindful of the documents and just getting things back to us as quickly as you can.
Okay, we are entering the end of our presentation. So there are some questions that we want you to consider when you are out there looking for properties. Like, what characteristics should you be looking for in professionals like Carla and Natalie? Number one, from the real estate broker standpoint, you want someone that is knowledgeable about negotiations. That's the strongest part, because the negotiation of any transaction is going to be the point that you actually win. Carla, what do you think?
In addition with that, you need someone that you can communicate with, someone that is responsive. You don't want to be trying to chase the person down. It's a two-way street. We need you to communicate with us, and you also need an agent that is going to be communicating with you.
Natalie, what do you think?
From a lender's perspective, you need someone that's going to be able to show you different programs, to tell you really what you can qualify for and afford before you get started. So that's where I come in and say, based on your credit, your income, this is what you could afford. So you want someone that's going to give you that real honest information so that you can move forward and find the best property.
Awesome, awesome. I have a question for you. Are you ready to become a landlord? It's different because you're going to have to deal with the tenants, the toilets, and the termites. So therefore, if you are ready to become a landlord, that's great. If you're not ready, there's options for you. I'm a property manager. You can hire my company in order to be the landlord for you. So that's something that you have to ask yourself. Do you have the resources to complete the repairs, if that's what you decide to do? And also, how much legwork and research should you do on your own? I'm going to kick this over to Carla because she has a really good answer for this. Carla, what do you think?
You should do as much as you possibly can. The internet is a valuable resource. You need to take an active role in knowing about the property that you're purchasing. We're here to assist you, walk you through, to provide information that we have, but you definitely need to do, your own, due diligence. You need to drive the area multiple times during the week. You need to drive the area at different times during the day. You don't just want to go there one time, like, oh, this is a nice quiet area, but it's, 1 o'clock in the afternoon. Most of the people are at work. You purchase the property, go home with the first weekend, every other neighbor, they got it popping. And you're like, what? I didn't know about this. So you need to do your own diligence as far as knowing the area. You can go to your local police department, if you're concerned about, crime statistics or everything, they'll be able to provide you with some information. But you definitely want to do as much legwork of your own as you can about the property.
Natalie, got any feedback for me?
You want to, when it talks about doing your legwork, I really need you to go by on the weekends. Friday and Saturday evenings is a real good consideration of the temperament of the neighborhood on the weekend. Is that a place you are willing to live in, which happened to a relative who, it was an apartment still, but didn't go at night, and it was terrible at night and the weekend. So you don't want to have that type of issue. Mm-hmm.
Thank you. Okay, what are the most important things you need to know about the current market? This is really important, okay? From a real estate perspective, from a real estate broker perspective, just to give you a little feedback, a few years ago, the interest rates was 2.5%, 3%. Now they're closer to 6%, 7%,
Mm-hmm.
which means that you're gonna have to be a little bit more patient during this market, okay? If you're a first-time home buyer, during the times when the interest rates was 2 to 3%, it was almost impossible for a first-time home buyer to get a property. Now it's a lot more probable because the interest rates are higher. So therefore, what you have to understand is that even though that you're paying a higher interest rate, you're going to probably get a property at a better price. Now, here's the good thing about this market. You can always refinance that interest rate. When you buy a property with a low interest rate, you're stuck with the interest rate and the price. But now it's a great time to buy. So you want to be cautious of that. You want to understand that this is still a seller's market. What does that mean? That means that there are more buyers in the market than there are properties for sale. But that's okay. We will get you the property that you're looking for, but you're going to have to exercise some patience. Natalie, what do you think?
Well, what I think with the market rate is it fluctuates. But what's the saving grace is you gaining equity, right? So once you make that purchase, you're going to put yourself in a position to start gaining equity. When the rates come down, you can refinance that property every 6 months if you want to, as long as it's advantageous to you, the borrower. Not for me, but if it's going to benefit you, save you money, yes, you want to refinance. But be mindful, if you have down payment assistance and you refinance, you do have to pay back that commitment, the down payment assistance, before you can keep the rest of the equity to use as you see fit. Thank you.
Awesome. Carla, do you have a little something to say about this?
Yeah, just the main thing in the market in which always is just you want to be prepared. You want to be prepared to come in to be make a competitive offer. I don't personally play the lowball game because, if you're serious, you need to go in with a serious offer. If you come in with an offer that's too low, the seller does not have to counter your offer. You can say, okay, I'm going to start here and let them come back. Well, they don't have to come back. They can say, this person is not serious. I'm not even wasting my time with them. and move on. So, if it's something that you really want, just be ready to be competitive, to be serious, to make a move. Also, I do want to add, I forgot to mention earlier, is your for your initial deposit. If you're getting funds from a 401k, from digital currency, Bitcoin, any type of cryptocurrency, you need to know how long is it going to take you to convert those funds into your checking account or your savings account. Because once we go into escrow, you're going to have generally a 24, 48-hour window to get those funds transferred in so that we can get this ball rolling. So you need to know, talk to your, like I said, whoever controls your retirement, if that's where the funds are coming from. Again, if you have money in cryptocurrency that you want to convert, you need to be proactive to know how long it's going to take you to get that money into your checking account. And that's the last thing, is just, we want to position you to be able to purchase when you can. In California, we always say, I'm going to wait for the bubble to burst. I'm going to wait for the bubble to burst. California has no bursting bubble. In my opinion, I don't have a crystal ball, but, I don't think that's going to happen. So if we can find something that is affordable for you, where you can manage the payments, go ahead, let us get you in now. And then, like say, interest rates drop, you can always go back and refinance. But if you're ready to go, let's see what we can do so that we can get you moving in the right direction and set you up for 2025.
Awesome. Awesome. All right. What happens if you're searching for units? There's no active listings that fit your criteria. Once again, get with me or Carla. If you see some properties that's available, if you know a little area that you want to live in, let us know. We will help you out. All right. Here's the 4 steps to buying 2 to 4 units. Make a commitment to act. Contact Natalie first so that she can get you pre-approved. Then contact me and Carla for a one-on-one consultation. This is super important. Write your goals down. There's a scripture in the Old Text that says, write the vision and make it plain. You want to make sure that you know the direction going, and the best way I know of is to put it on paper. Okay? Contact me, and I will give you your free consumer guide on income property. Okay? Got some information for you that should make you happy. Natalie, are you in the giving mode this morning?
We are. We have some questions. You want to do those questions now before we go into this part?
What was the questions?
They're in the chat. Let's see.
Let's finish this up and then let's
so here we are. We have a voucher that for this presentation, reaching out to me to do the application, 3 nights, luxurious accommodation. So anyone that's interested, we also have information on selling, the right real estate professional to buy or sell investment property. This is information that's going to be educational, that you want to equip yourself with knowledge and learn this information that can help you to make the best purchase and the best investment in your future. So look here, you have a voucher from Michael to you, anyone who's interested in going to Las Vegas and staying for 3 nights.
Awesome. Carla, let's wrap it up.
Well, here's my information. Take a snapshot of this page. You can always contact me. I'm an old-fashioned kind of realtor that likes talking to people. I know sometimes, I get a little frustrated with some realtors. They say, email me, text me, don't call me, but you can call me and I'll be here to help you through this process any way that I can.
Awesome. Thank you, everyone, for coming. Here's my information. Please take this information seriously. I cannot believe that you can buy an $800,000 piece of property with $12,000. Come on now. What else do you want? So please contact Natalie. Reach out to her. I want to give you the application voucher if you're in a position to buy or not, but I want to give that over to you. And I appreciate all of you from taking out time of your busy schedule to make this happen. Thank you.
All right, here's my information. You have my name, number, my email. Please email me or text me. I'll get back to you. We will make a plan for you. We will identify your buying power for you. Or if you know someone who is interested, please share this information with them so that they could get themselves in the best position possible.
Thank you so very much. What we're going to
Questions?
do,
Yeah.
we're going to stop this recording, and then we will be able to answer any questions that that they may have. Okay. Once again, if you want a copy of this recording, please reach out and we will have it. Thank all of you for coming. We appreciate you. We love you. Have a happy holiday season.